Bitcoin could absolutely go lower from here. In today's video, we're going to look at exactly how bad things could get and why. Not because I'm bearish long term, but because every smart investor needs to understand the worst case scenario. If Bitcoin breaks the wrong levels, the entire crypto market could experience a major shakeout very quickly. Let's discuss the downside that almost nobody wants to talk about. If you appreciate honest analysis, take 2 seconds to hit the like button and share this video with a friend who still holds Bitcoin and should hear both sides of the story. Let's start with the Bitcoin Fear and Greed Index. It's still sitting in extreme fear territory. Normally, when fear reaches these levels, markets tend to bounce. However, even if Bitcoin rallies from here, it could simply be a relief rally that creates a lower high before another lower low. The reason many analysts are concerned is because 2026 is beginning to resemble the 2018 bear market. The 2018 versus 2026 comparison. Many are pointing out that Bitcoin's 2018 bear market and the current 2026 cycle are following remarkably similar patterns. In 2018, Bitcoin capitulated into February after its cycle top. In 2026, Bitcoin also capitulated into February, following its recent top. The similarities continue. Both cycles created a higher low. Both tested the 200-day moving average during the first week of May. Both then corrected lower. In both cases, the February low was taken out in June. This is where things become concerning. In 2018, after that June breakdown, Bitcoin continued falling until Q4 and eventually experienced a final capitulation event near the end of the year, a roughly 50% correction. If Bitcoin continues tracking that historical pattern, then another major leg down could still occur later this year, around October or Q4. Bitcoin can't go lower. Actually, it can. I'm as long-term bullish as anybody, but let's talk about reality. Bitcoin can absolutely go lower. The macroeconomic headwinds are there, and here's one potential chain of events that could create a much larger correction. June. Mega IPOs and AI-related offerings absorb available capital. July, the stock market crashes and a bear market begins. August, the 10-year Treasury yield reaches 6%. September, the Federal Reserve hikes interest rates. October, the Clarity Act fails to pass. November, midterm election chaos. December, a black swan event. Not another COVID-type event specifically, but some unexpected shock to the system. Comment below, what do you think could be a potential 2026 black swan? Now, I'm not saying this scenario is likely. In fact, for all of these events to unfold exactly this way would be extremely unlikely. The point is that if even one or two of these happen, Bitcoin could certainly move much lower. I'm long-term bullish, but it's important to plan for every possible outcome. Why these risks are real. Let's break down some of those risks. Mega IPO risk. It's entirely plausible that upcoming IPOs from companies like SpaceX, OpenAI, Anthropic could absorb enormous amounts of capital. As shares unlock in the months after those IPOs, significant selling pressure could hit the broader market. A scenario could emerge where stocks peak this month, experience a major correction in July, and enter a bear market style decline. Historically, mega IPOs often coincide with market tops. If the current AI and technology bubble bursts, crypto could shift from a slow bleed into an avalanche. Many people believe this time is different, but if the 4-year cycle remains intact, lower prices in the second half of the year remain possible. Bookmark that. The Clarity Act risk. Most people assume the Clarity Act will pass, and eventually it probably will. The question is whether it passes before the midterm elections. Will it pass this year? That's less certain. Political concerns continue to create obstacles. Some lawmakers continue raising concerns regarding ethics and illicit finance. Senator Angela Brooks explained.
I think a lot of Democrats have very legitimate concerns around the ethics that have to be addressed. I mean, we have a president who is, along with his family, I mean, everything from how he's engaged in hotels and golf courses, buying planes from foreign leaders. I mean, you name it. I mean, this is an administration that people have grave concerns about in the area of corruption. They've seen the grift, and they want to make sure that as we regulate it, we are absolutely attending to the concerns around ethics, illicit finance.
Midterm election chaos. Another risk is election-related uncertainty. Think back to the political chaos surrounding previous Trump campaigns. Political instability can impact markets. Even local elections have demonstrated how quickly narratives can change. For example, in the recent Los Angeles mayoral race, early vote counts suggested Spencer Pratt was leading. As more votes were counted, it appeared that Nithya Raman would eventually move ahead and face Karen Bass in the general election.
Evidence than ever presented.
Let's talk
your
about
elections in this country. We're like a third world country. Your elections are crooked, and you're crooked, and Meet the Press is crooked, and so is ABC and CBS and CNN.
But Mr. President,
you're one-sided crooked networks. All right, let's call it quits because I've had enough. Thank you, darling. Have a good time.
Mr. President, let's please. I traveled all the way to Wisconsin.
I've sat in the rain with you.
I know.
I've sat in the rain with you for an hour, on and off in the rain, and I've given you enough time. You ought to straighten out your press because you know what?
Mr. President,
a country can never be great with a dishonest
Listen,
press.
we traveled all the way to Wisconsin for this interview.
Whether investors agree or disagree, political instability remains a market risk. Even Tom Lee sees risks. Even one of Wall Street's biggest bulls, Tom Lee, is warning about a possible correction.
I think the market did have a parabolic lift in the last month. And now I think there's some sobering taking place because expectations are higher. But I also think that SpaceX, $75 billion is a lot to ask the public to fund. So I think it is a big lift in terms of how you're going to fund that purchase. And so I think now when the stock's wobbled a little bit, I think people are raising cash. I don't think that this is the start of a broader correction yet, but as you know, we do think that later this year there's going to be something that feels like a bear market.
Why I'm still bullish. Despite all these risks, Bitcoin is higher today. Crypto continues climbing a wall of worry. Bitcoin and Ethereum both have RSI readings near historically low levels. That could mean a temporary relief rally or a genuine trend reversal. Fundamentally, crypto is in a much stronger position than it was 3 years ago. 3 years ago, the SEC was suing Coinbase. Today, Coinbase is part of the S&P 500. That's a massive difference. Michael Saylor and strategy. Michael Saylor was heavily discussed this weekend. Rumors circulated that he would announce a major Bitcoin sale on Monday. Instead, he hinted at the opposite. Saylor posted that it was a good time to add more dots, which many interpreted as a signal that another Bitcoin purchase announcement is coming. Strategy CEO Fang Li reinforced that view, stating, "Our corporate strategy is to increase net Bitcoin and Bitcoin per share over time. Rumors otherwise are just rumors." That is clearly a bullish signal. What about interest rates? Could the Fed raise rates? It's possible, but I believe it's unlikely.
We call AI in a couple of years, we'll just call business. And AI is going to make almost everything cost less. And the U.S. can be a big winner. And it's a hugely exciting moment. If I were to step back for a minute, if I were the president, what I'd be worried about is a central bank that doesn't see any of that. A central bank that is stuck with models from 1978, governance from a prior period, and don't recognize we could be at the front end of a productivity boom. And if I were the president, I'd be worried that they might not see it. And they might think economic growth is somehow going to be inflationary. I think we were probably in the early innings of a structural decline in prices. Ken sees it on the front lines of real businesses. And I think if you look over the period of the next year or two, it's a pretty special moment.